May I kindly request the professors to take off their caps? I open this session with a prayer. May the spirit of wisdom and mercy grow and blossom in all of us. Please be seated. Good afternoon, welcome everybody. Welcome to this academic session on the occasion of the public PhD defense by Diederik van Thiel. And his dissertation is entitled On the Human-Centered AI Transformation of Banking, Exploring the Impact of Behavioral Finance and AI on Banking Transformation. I would like to present the PhD committee who is present here today, which consists of Professor Oerlemans, there, from Tilburg University, and we have two professors from participating via Zoom. This is Professor Chen from Cardiff University and Professor Van Engelen from Groningen and from TU Delft. Welcome. And then we have Professor Bosma from the VU Amsterdam, and finally we have Professor Van Rij from Tilburg University. Welcome. There is also a promotion team present here today who are sitting here next to me, which are Professor Leenders and Professor Goudet, also from Tilburg University. So welcome again, everybody. Before starting this academic session, I would like to give the PhD candidate the floor to give a concise summary of his research in terms that can be understood by the public.
Thank you very much. Highly esteemed opponents, dear family and friends. I'm honored that you all made it to Tilburg University to be present at my PhD defense for the upcoming hour. A defense which I will do in English. Also a special welcome to the people in the live stream, the international audience. I'm also honored to have you here. My dissertation explores a revolution in banking, brought about by the marriage of artificial intelligence and behavioral economy. This topic has been the core focus of my research during the past decade. A journey marked by ups and downs, trial and error, despair, and finding renewed inspiration. So I'm honored that we now came to the end of the journey and that I can swiftly introduce you to the highlights of my study. But before I do that, I've got a question to you. Who of you is not a private banking customer, would love to have the richness of the advice and services offered by private banking? You can raise your hands. All private banking customers. Indeed, how amazing would it be if customers across the world could use their mobile phones to access such an advisor that not only manages your finances proactively, but also does that in the context of your life and life decisions. How would that change the trust in banks? And what would that do with global productivity? My interest in scientifically exploring the underlying drivers that could make this possible was sparked by a personal experience. After selling our first company, iOpen, to Aegon, we started Advice Robo in 2013. 2 years in, the product was ready to scale internationally. And just as with iOpen, we decided to go to the United Kingdom first. But when securing financing, we hit many roadblocks. Banks considered us too young for traditional financing, and venture capitalists actually kind of thought the same. In startup terms, this is called the valley of death, where traditional banks and VCs are slow, rigid, and unresponsive. My hypothesis back then was that it was caused because the traditional methods for risk decisioning fail to properly assess the profile and potential of both the startup and the startup team. This experience ignited my interest in exploring alternative data to solve this issue. Data that could support the 150 million startups just like Advice Robo, a number that has since grown to 340 million. But when exploring the world of alternative data for the financial inclusion of small businesses, I discovered that the problem was even bigger on the consumer side. Meet Maria Fernanda Hernandez. Maria lives in Mexico, is married, has 2 children, and works irregular hours as a waitress in a restaurant. She has difficulties making ends meet, and sometimes needs support to help her, for example, buy clothes for her children. And just as in the startup example, banks don't give home with profiles like Maria, because the traditional methods again fail to provide a clear picture of the profile of her financial behavior and her creditworthiness. The way banks assess risk dates back to the 1920s, when they began calculating financial ratios. Ratios that are not capable to solve issues like Maria's or the startups. Before that, decisions were made based on personal relationships and reputation, an approach that apparently has become increasingly difficult in this digital age, when banks have decided to close their branches around the world. But appearances can be deceiving. Because of the transformation of society, driven by technological innovation, we are entering an era where the combination of behavioral finance and AI can make these things possible. The banking world has evolved today to the banking 4.0 world, a world in which value creation is brought by digitalization, partnerships, ecosystems, and sharing data through open banking. The transformation ahead to banking 5.0 is one driven by AI. It's a shift towards a world focused on hyper-personalization and inclusivity. Two aspects that, as shown by the examples I gave, are far from the current state of banking. It's a world in which digital banks will act as the GPS for your finance. So I set out to explore what data could drive this transformation and whether AI is truly a differentiating force in this. In my research, I explored how behavioral finance and AI come together to create a new banking business model called intelligent agents. Intelligent agents, or digital assistants, are dynamic systems that learn from the user's preferences and behaviors. Essentially, they are highly personalized apps that understand what you like and do and come up with the best products and solutions for you. It's like moving from generic clothes to perfectly tailored ones. In my studies, I specifically looked at the development of these agents to solve two major issues in the financial world. The first one is the information gap. It's the gap between what we know about financial products and financial decisions and what we should know to make the best decisions for us. The other is the access to finance gap, as illustrated in my earlier examples. So, my first research is about closing the information gap. It's about the customer experience of these digital assistants. From the key questions, what are the drivers of customer experience and digital advice, I performed a research across the United Kingdom and the Netherlands. In this research, the main finding was that just as in traditional advice, the advice quality also in digital advice is the most important factor that drives customer experience and usage. However, in this digital world, it's even more difficult for consumers to directly assess the advice quality. And that's why other factors like co-creation, speed, and transparency play a bigger role in driving this advice quality. In this study, I created the Digital Customer Experience Index, a model that banks can use to assess the quality of their digital advice solutions. In my second research, I took it a step further, and I looked at how banks can target their digital advisors to different customer segments. Again, with the same research panel across the United Kingdom and the Netherlands, I found that the market should be differentiated on convenience and someone's level of financial literacy. When we talk about true intelligent agents or virtual assistants, they add the most value, as you can see in the graph, to true convenience seekers. However, there are also other customer segments, for example, the rigid types that require decision support tools, information to make the best decisions for themselves on their own. The conclusion of this study is that intelligent agents are not a one-size-fits-all solution. They require hyper-personalization strategies to bring the most value. In my third study, I moved forward to risk decisioning. From the hypothesis that AI works better for risk decisioning than traditional methods do, I did kind of a Pepsi test. Over a period of 2 years, we tested our AI methodologies against those traditional credit score models of major Dutch and British banks and credit card companies. And we found in all experiments that AI outperforms the traditional models. In mortgages, it even led to 20% lower default rates, and in credit cards, even to 30% lower default rates. So AI modeling really is there to transform the way of risk decisioning. But when I started, my hypothesis was that banks need other data to better assess the profiles of Marias and of startups. So I dove into the origin of banking, went back to reputation and relation, and tried to compose a model based on personality. From the key question, can people's financial personalities make services more accessible to vulnerable customer segments, I composed a new credit score model, a psychometric credit score model. Psychometric credit scoring in itself wasn't new. It's there since 2011. But the existing models have very low predictive power. So based on my data search, I composed a new model that combines psychometrics and behavioral economy. The conclusion was that this model shows high predictive power with a Gini score of 0.56. By my knowledge now, it's the most predictive alternative credit score model in the world. And then, finally, I went back to where I started, the financial inclusion of small businesses. I tested this psychometric model in a live test for over 3 years with a fintech lender in Czech Republic. And what we found over here is that indeed also, in this case for small businesses, psychometric credit scoring really improves the credit decision making that they did traditionally. It led to 32% more loans and 23% lower defaults. So financial personalities are a way to close this access to finance gap. I'm coming to an end now. Looking forward to the transformation of banking towards a 5.0 world, intelligent agents will play a major role in closing the information and the access to finance gap. The question now is, who will dominate this world? Will it be traditional banks, or will it be big tech or other entrants? In any case, for us as consumers and as small businesses, it's good news, because the development of these solutions will help to support the 4.5 billion people like Maria in the world, and the 340 million startups like AdviceRobo once was, to drive their lives and businesses. Thank you very much.
Thank you very much for this very clear and interesting presentation. Could you please read out loud the formula that you were given?
I hereby declare that this thesis is my own work, and that during my PhD program, I operated according to the principles of scientific integrity, honesty and scrupulousness, critical attitude and transparency, independence and impartiality.
Thank you. All right, then the opposition will now be opened by Professor Oelemans from Tilburg University. Professor Oelemans.
Thank you, Chair. Thank you, dear candidate, for a very interesting presentation and a very interesting read, I must say. I really enjoyed it, especially it's a little bit out of my own comfort zone, and therefore it's more interesting to read your dissertation. To me, it gave a very nice insight into the, let's say, possibilities of AI technology, in this case for banking, and due to the fact that, well, it's not only the dissertation, but all the chapters are published, which is an accomplishment itself, and I want to congratulate you with that result. So far, so good, right? Now the critical part starts. When you start reading your beautiful cover and dissertation, my eye was caught by the title, Human-Centric AI Transformation. It's central in the title and, of course, central in the dissertation. The thesis takes the perspective of banks and the possibilities AI technologies provide to them to collect big data on users and consumers and use that to come to value propositions to users and consumers. But then I thought, well, where are the humans in this story? Because the AI is kind of collecting information on humans, but if you say, well, the users and the consumers are the humans, then, and you think in terms of power relationships between banks and users and consumers, well, we already know that's not really equal, is it? Yeah, there are a few banks and many, many users, and in economics they have a specific term for that. So what will this big data collection capacity of banks do to the power relation between banks and users? My statement is that we really need more protection of the interests of the users. And do you agree with that statement? And if so, what can be done to protect the data hunger of banks? And if not, why not? And the timeliness of this question was actually in the newspaper yesterday, where the big boss of Meta basically said, well, give us the free market and let the big tech, and well, I think big tech and big bank are kind of interrelated, so give us a free hand. So what does that mean for, let's say, my colleagues here as users of banks?
Highly esteemed opponent, thank you very much for your kind words and your fantastic question. To the development of the power of banks and big techs serving the many people in the world. And on your statement that we as consumers need to be protected more, I partly agree and I partly disagree. And I'll shortly explain that. In Europe, we have the most fierce regulatory system of all continents. In this case, when it comes to big data and AI, we have several different legislations like the GDPR, of course, the AI Act, DORA, that from all different angles try to protect us as consumers. GDPR in terms of privacy, AI Act in terms of fairness and transparency, and DORA against cybersecurity threats. For companies that operate in this world, that leads to an increased cost burden. Currently, if you look at the banks nowadays, 20% of their costs is driven by compliance to work with these protection legislations. When you look at the United States, for example, the United Kingdom follows Europe, and that's kind of the same. In the United States, there's completely different legislation. They have a light form of GDPR, but furthermore, it's sector-specific. A major difference, for example, between the US and Europe is that in Europe we are obliged to be transparent when it comes to risk scoring. You need to be able to explain on what drivers you accepted or rejected the customer. That's not the case in the US. The consequence is that in Europe we are kind of slow in the development of artificial intelligence and big data. And we're trying, we are at the moment now that the question is, are we going to miss the boat or not? Having said that, that's why I partly disagree, because I think we should work towards a world that the users can more protect themselves and determine themselves with whom they want to share their data and for what purpose and for what occasion and with whom they don't. Having said that, a lot of people are not capable of doing that. So it's super good that there is regulation, especially the GDPR is super good, that banks are regulated and also other companies not to abuse the data that they collect of their customers. But it's a very delicate balance, I think, that we should find.
What do you what do you think of, let's say, what we hear from the United States, that they will push Europe to leave this harsher regulation?
No, I disagree with that also, because I think what Europe does well is put the customer at the center of everything, and making sure that things go well from the customer perspective. In the US, like I said, it's much more lighter, and I think that's not in all cases good. It's good for the development of artificial intelligence, but for some customer segments, it's not good. And that's why I think your regulation should be much more specific on protecting these customers that need protection, and not a one-size-fits-all approach continuously like in Europe, where the only consequence is that you heighten the cost burden for the companies that try to offer solutions to you. And I think that's not the way forward in the current world.
Thank you. I have a kind of a related question. When you're are near to the end of your career, like me, although I still look young, thank you. I spent my time, my free time, partly with, let's say, fighting poverty or supporting people fighting poverty in Tilburg, because Tilburg is not, together with Rotterdam, let's say, the richest city in the Netherlands. And shouldn't we pay extra attention with low income, people with low income? They are often not that computer literate. They are, shame is a very important part of the situation. So yeah, if I read you and hear you, I think, well, it's a little bit of a technological optimist speaking here, believing in the technological possibilities, and I'm fine with that. But I'm also worried about these people in very difficult, vulnerable situations that they kind of, cannot deal with these technologies. What is your view on this?
Highly esteemed opponent, thank you very much for this second great question. In short, I agree with your statement. If you go back to my dissertation, most chapters are about fighting vulnerability. The researches I did, especially on the risk decisioning side, in the customer panels, were people selected with low incomes, incomes around 25,000 euros or dollars a year. The thing is that, and that's interesting, and that's why I fully agree with your statement, is that it's not only the low-income people who are at risk. In the current world with natural disasters, every one of us can be hit and come in a completely different situation. When it comes to your physical health, you can be hit and come in a completely different situation. So yes, I fully agree, we should protect the vulnerable people. And most of them in the world, if you look at the Marias, I presented in my presentation, are indeed digital illiterate, so have difficulties accessing these opportunities. That's changing these days. What we see is that, especially the next generations, the millennials, the Gen Z, are very digital literate, especially when it comes to their mobile phones. And that offers a new opportunity for this technological optimist to drive financial inclusion for these customer segments.
But let's say the solution you propose is basically algorithm driven, right?
Yes.
Yeah. So my experience is that especially bringing, let's say, the person back in the interaction is really helpful.
Yeah.
And well, in your presentation, you kind of framed that, oh, that's old-fashioned.
Highly esteemed opponent, thank you very much for this additional remark. I kind of disagree with it, though. What I proposed to say in my first 2 chapters about the digital experience, the customer experience of digital advice solutions, is that they handle about advice quality, but co-creation, getting the user into play, plays a very essential role in the success of it.
Yeah, thank you so much.
Thank you. Then the opposition will be continued by Professor Chen from Cardiff University, who's joining us via Zoom today. Professor Chen, the word is yours.
Thank you. Thank you for the thank you committee, and thank you candidate. First of all, I wanted to congratulate you to put together such a nice piece of work. It's it's quite rare sometimes when you read a doctoral thesis, you get excited, and your work is one of them. So congratulations. And I also felt that your thesis is put together with very strong practicality. A lot of the results and outcomes can be directly applicable. So that's another thing I like to commend your great work. Based on that note, I actually have a couple of questions to ask you. At the doctoral level, we always wanted to see that how your work bring the theoretical contribution to the field. And your work is very much focused on the human centric AI, and that falls into the behavioral finance area. And in many of the remarks and the quotes you wrote in your thesis, you quote a lot of work done by the Nobel Prize winners, several Nobel Prize winners. So I wanted to ask you that while you design your whole thesis, to try to bring that to practice, what kind of cognitive traits do you observe? And that is very crucial for the type of work you're doing. And how do you select these traits so that they're very representative at both individual level, for example, individual consumers, to represent their behavior of making financial decisions, in the era of AI, and how at the collective level, so for example, at the overall market level, the decision-making behavior is like. Are they aligned with one another? And how does, say, the fundamental theory like prospect theory help us understand and trust the results you obtain from your work?
Highly esteemed opponent, thank you very much for your kind words. An intriguing question about, it's a question in 2 parts. The first one was, how does theory go to practice? And what kind of cognitive approaches, cognitive traits did I discover as the foundation for my models? In short, I started when I set out to explore this way of risk decisioning with the research and the models that were present in the world already. And in risk decisioning, what I found is that the Big Five model, which handles about openness, consciousness, anxiousness, traits that people have, was used by many suppliers to deliver psychometric credit scoring. The issue with that OCEAN model is that it's based only on traits, and that makes it very static. So what I try to do is find new ways, new data, that could not only build a score on traits, but also on attitudinal aspects, like, for example, debt attitudes people have. I looked at material skills. It's a theory in behavioral science to come up with the factor materialism in the model. I found a lot of research about the confidence of people, and especially for entrepreneurs, overconfidence is a very risky attribute. That's also not per se a trait. So I found different in different areas cognitive traits and attitudes and behavioral insights that all together made me construct this new model. Does it relate to, for example, the prospect theory? Not in full. The prospect theory is more about endowment, about loss aversion. It's more about how people make decisions when it comes to financial choices they have to make. This is the aim of this paper and this research is to make something, an instrument that could qualify that. And that's why I related to the other elements I just mentioned in the behavioral economy than to the prospect theory in itself. Then your second question is, at the market level, does this influence decision-making at the moment already? And I think that's what I understood from the second part of your question. Is that true?
So yeah, I meant, like you mentioned that you built a lot of these intelligent agents to reflect or manifest, to say, the consumer behaviors, etc. So that is more at the individual agents level. But when you collectively look at all these agents together, that is at the market level or collective level. So how do you align these two? So that your results could be quite robust if we are looking at individual behavior influence versus the collective level. When the regulators make regulatory changes, we possibly would need to look at more at the collective level. But when individual make decisions using, say, the AI tool you created, it is more at the individual level. So I'm basically asking, are these two aligned? How confident we are about it?
Thank you very much, highly esteemed opponent, for this amendment. No, at the moment, they are not aligned, in my opinion. And yes, they should be aligned. Let me elaborate a little bit. When I started this journey with the researches about closing the information gap, the psychometric model that I first used was a model that was applied by the Dutch regulator, the AFM. We used statements that they use to make profiles of model consumers, is what they call it. By my knowledge, that's not something they actively applied in their regulation and oversight of the financial advice. The same thing I see in the United Kingdom, where we work a lot with the FCA, where a lot of oversight is being done at, is this good for the individual consumers? So for example, testing new data sources on the sandbox of the FCA provides us the insight and the FCA the insight. Does that improve, for example, the financial inclusion of the 40% British people that are vulnerable at the moment? But what they don't do is use the instrument as an instrument to make model profiles, to give feedback back to banks and companies like us, fintechs, on how to improve it, to be more aligned with the individual profiles, deeper know your customer insights than that they currently do. But I see it as a development forward. I was called an optimist, and I think I truly am. So I think this is a starting point, and in our discussions with regulators, we continuously push these psychometric insights in the hope that they will embed them in their models for the oversight across the markets.
Thank you. I think did have a question about regulatory, but I think we've kind of touched on it. So, this kind of individual level decision-making profile, whether you can actually draw the common patterns to make it like to distinguish the distinctive collective level pattern would be very, very useful for regulators to know. Unless there is a collective value of the results you're producing, I can see the regulators would be very reluctant to make big changes. So I think this possibly is the area that we should continue the conversation. And, I think more research are really needed, especially for the regulators. But again, congratulations. I really enjoyed it. And I think this opens up a lot more research in the area.
Thank you very much, Professor Chen.
Yeah.
Thank you. Then the opposition will be continued by Professor Van Engelen from Groningen University and TU Delft. Professor Van Engelen.
Thank you, Chair. Dear candidate, I absolutely concur with the colleagues who convey to you all the compliments that they mentioned. You are dealing with a topic that is top of mind of every person in the financial industry, as well as everyone who is trying to bring as much of the financial possibilities to people in the world who most need it. And I really liked reading your thesis. I learned a lot from your thesis, but as always, the scientific arena is filled out by debate, and that is what we are going to do, of course. I have two merely contextual contemplations that I want to share with you and invite you to reflect upon one of them. Not two, but one, otherwise I will be out of the time that is available to me. One is about the methodological scrutiny. I read your thesis in such a way that almost anything you researched after you found an agreement or an adhesion for your work. And that is something that's always a little bit tricky when you find something like that. And that's what the algorithms that you designed actually do. When we apply almost any optimization algorithm to almost any data set, you will find an improvement. And of course, you can elaborate on that. But that is not what I'm going to ask your question about. I would discuss in even more detail than the previous two opponents have discussed with you. I fully concur with the societal relevance of your research and the products that you have developed and tested, and I really admire and value your perseverance in developing them. But they introduce a new risk, and together with you, I would like to step beyond the regulations that have been made available. And I would like to refer to a work by a person you probably know. I can't imagine you don't know her. And that's the Harvard data scientist Cathy O'Neil with her wonderful book, Weapons of Mass Destruction. And for the audience, math is spelled with M-A-T-H. And not M-A-S-S, of course. And we know that AI algorithms depend on neural networks or the like. There are many variations in here, but they tend never to forget. They are actually not capable of forgetting anything. That's how they are designed. And that's also related to pure physics. For pure physics, we know that forgetting information is way more energy costly than acquiring or creating information. And what might worry us is that once a person or a legal entity is classified in one of the schemes, it might become very, very difficult, if not impossible, to unclassify a person over time. And that's what precisely the threat that O'Neil showed us in the book. And that's what I would like to ask you about. You may know that I have my experience in the financial industry, both on executive boards as well as on non-executive boards. I'll give you one example. When I was chair of the board of the executive chair of ABP, the largest pension fund in the world, there was the chair of, in Dutch, that it is clear to you, of the uitvoeringsorganisatie. That's something that we only have in the Netherlands. And I had a discussion with DNB and AFM, the oversight organizations in the Netherlands. And we were accustomed to keep all the information of our customers all over time. We know the full history of these people about when they started working, where they worked, how long they worked, etc. And when we had to calculate how they were, what the pension expenditure for each person were, we could build up the whole history. And DNB, as well as AFM, they urged us to forget history and only work from our latest knowledge of a person. So when there's a change in their life, we had to change and then forget all the history behind that. And that's something that shows out to be rather stupid. Now we're going to change our pension system and we need all the history again. Whatever, that's my personal frustration. But there is a question based on this. One is, do you also worry about this type of meta risks? So not the financial risk, but the meta risk that I mentioned. And the second one is, probably you have had your discussions with DNB and AFM also. We know both then in that case that they are extremely reluctant. And I would like to invite you to help us all, maybe all people in the public, but especially me. What arguments can we make available from the work in your dissertation, as you have presented it to us today? What arguments can we get from your dissertation to convince DNB and AFM, we make it quite personal, that the risks, that we can, let's say, contaminate the risks and that the benefits actually exceed the social risks that we see?
Highly esteemed opponent, thank you very much for your compliments and your intriguing question about how we can best deal with the risks related to the right to be forgotten and the issue in these approaches, especially these AI approaches, that they don't forget anything. Let me start by saying that I fully agree with this meta risk as a meta risk in itself. I think AI, there are actually two kinds of visions in this world about AI. There's a very positive vision that AI can help us bring the world forward, make things more efficient, and help consumers better. There's also a vision, and that's one you mentioned, that is very fearful of the implications of AI if it's not used in the right way. And they proposed a stop in AI development because it goes so fast that it sometimes is beyond our control. Now back to the question. I still am an optimist, but I'm also very open for the arguments in this other vision. Because indeed what I also see happening is that the intention with what models are being made is very depending on how good or how bad the impact of the model will be. Let me give an example. If we use such models for driving financial inclusion of vulnerable customer segments, that's undoubtedly something good. Unless, like you say, people are rated very vulnerable, but they, in their life, change things and go out of that segment, but are still remembered as vulnerable. What I, in my dissertation, tried to say is that, especially when it comes to risk decisioning, because that's where this is most prevalent, that the approaches should be dynamic. The reason why I did not dive into the ocean model, for example, further, is because it's static. And there's the issue. As long as the data and the models are based in a static way, and there's no way that they can forget things, then you have the issue. So I propose more dynamic approaches in which you continuously monitor and measure data, that you do more longitudinal data queries, that you do more stratified sampling also, looking at specific product for example, so that it helps to, in very specific circumstances, build the value that we would like the models to have. For DMB and AFM, my arguments would be this exactly. So look very carefully at the intention behind the models. So what's the intention of the model? And secondly, make sure that all models become dynamic, that they will build on data that you continuously collect, so that you measure improvements in people's circumstances and can deal with that. And I think that's also the world we are moving towards, the banking 5.0 world, which is inclusive and hyper-personal. To do that, you need dynamic data and you need dynamic modeling.
Thank you very much.
For
the sake of time, I really have to cut this short. Thank you, Professor Van Engelen.
Thanks.
Professor Bosma, you're up next. Can I kindly ask you to keep your questions very short?
Thank you, Mr. Chairman. I can. Let me then shortly congratulate you on your research that you've done. I think it's been quite a journey. You also mentioned it in your talk, but a journey you can be proud of. I would, if you let me take you to chapter 4 and specifically to page 98. On the top, you have is listed as a choice you've made for a logistic regression model. You list reasons of explainability and transparency for that choice, but I think you know that explainability of machine learning models is about as high as it is for a logistic model, but we're not going to delve into that right now. What I would like you to do is, given that you have chosen a logistic regression model, there's a assumed linear relationship between the predictors and the outcome. And I would like you to elaborate on the consequences of this choice. For example, what do you miss out on?
Highly esteemed opponent, thank you very much for your great question. To clarify, I'm going to repeat it. So in my dissertation, I made a psychometric model based on a logistic regression, and that includes a linear relationship. Your interest is in what I leave out because of this linear relationship?
Yeah, indeed.
Okay. If I look at the drivers in the model, then they relate to what I presented earlier, a combination of attitudes, skills, traits, and behavioral intentions. And they are being developed based initially in this research on a questionnaire. The linear relation between the questions, their impact on arrears, the model and the score that comes out of the model is intentionally linear in this case, because it helped me to understand what the impact of the different drivers on the total score was. Going forward, I fully agree with you. Once you understand the impact of the different questions on the different drivers on the score, more innovative modeling approaches could be used to improve the predictiveness of the model. And I think that's the weakness of it as it is over here. Still, it is a good predictive model, but because it's a linear relation, it doesn't take the full opportunity out of the data used. Secondly, the model is as good as the data that we used for it. So going forward, what I would also do is add other data points, other data sources also, to enrich it, and therefore it also requires other modeling methodologies that could work with other data points. So answering your question, I think the weakness of it is that because it's a linear relation, it's not getting the full predictiveness out of the data, but it was done on purpose because I needed to understand what the underlying relations also were.
Thank you very much. Another question is on the more ethical side. The ethical side of using psychometric scoring models, actually. So, could you address some of the ethical concerns that you have in using psychometric scoring models? For example, when certain traits correlate with socioeconomic status or ethnicity. And related, how do you propose to audit these models for unintended discriminatory outcomes?
Highly esteemed opponent, thank you very much again for this great question about the ethical side of psychometric modeling. I think psychometric modeling in itself enables us to better understand the profile of an applicant in this case, broader than just his financial behavior or financial status. What can be a danger in that is that that people, if you don't do that properly, people might have the opportunity to be discriminated. For example, financial skills is one of the drivers in the model. We know it has a high impact on the final score of the model, but people with financial skills, with low financial skills, don't need to be labeled forever that they have low financial skills. This is an example of what we discussed earlier that can be improved. So in auditing these kind of models, again, I would say that we need to make these models and this data gathering dynamic to make sure that the outcome represent an actual profile of the customer in that situation at that moment. I think the danger is very big if it's static, because then you have the old picture that's being used over and over. And I think it also, another issue might be in the explainability, especially in Europe, where if people are rejected based on a psychometric score, you need to be able to tell them why they are rejected. Especially when it comes to applicability, banks don't tell their customers that they are rejected because they have low financial skills. That's not how you do that. So I think there is an issue, there are two issues, one in applicability and one in potential discrimination. And I think the auditing should be done by making these things dynamic.
Thank you.
Thank you very much, Professor Bosma. Then I quickly turn to Professor Van Rij for the final question.
Okay, dear candidate, it was an interesting journey together, starting years ago, and the environment changed. A lot of things that you are interested in, and I was interested in at the moment also, was not known when we started. Robo-advice became a sort of AI development, and also the personal assistant, the idea of what I call the virtual guardian angel, a sort of second brain of a person to help him or her with financial affairs. But there is a result. There is this dissertation, and I congratulate you very much with this result. My question, it's known in the literature of behavioral finance that financial knowledge or financial literacy doesn't lead to a very high improvement of financial behavior. And that's a very strange result, that if we teach people financial literacy, or if we teach people financial capabilities, we hope and we expect that would lead to better financial behavior, less arrears, better spending and saving and debt of the person. But we find that financial knowledge or financial literacy has some other effect, namely overconfidence. And that people believe that they know everything and make from this belief or predisposition not better financial decisions. I want to point especially to page 6, where you cite a CEO of Microsoft, that artificial intelligence will enhance human capabilities rather than replacing them. And my question is on this. If you teach people financial behavior and you find it does not improve their behavior, and you teach them another way, more capability-oriented teaching, and you increase maybe financial efficacy, and at the same way, it improves financial behavior a little more than just a theoretical understanding of financial literacy. And my question is, what will happen if AI-based recommendations are given to people? Will this extend their knowledge of financial behavior, or will it replace or substitute their knowledge? If people trust the financial recommendations, they might think, okay, I don't have to think myself about it. I trust them and I follow their recommendations. Or do you think they will extend their knowledge due to the system and become more critical and learn more than they had before?
Highly esteemed opponent, thank you very much for this interesting question. To the impact of these kind of intelligent assistants on the behavior of people. And what I did in my research is compose a segmentation model. In chapter 2, I did that, in which we saw that the market needs to be segmented or distinguished based on someone's level or need for convenience and someone's financial literacy. Financial literacy in itself has more components than only financial knowledge. It's also financial skills, like you say. And indeed, there needs to be also a motivational element added to drive financial behavior. Having said that, what I found in my research is that financial skills plus motivation, and for example, in forms of debt attitude or materialism, so also with the direction of the motivation, provides insight into how people are going to behave and if they are going to behave. And when we bring this to intelligent agents, the risk indeed, like you also suggest, is that it takes away our critical thinking as human beings, that the agents take over from us. I think that is, in some cases, with some customer segments, like for example the convenience seekers that I found, a real risk, because they leave as many things as possible over to these kind of intelligent agents because they're simply not interested in making these decisions themselves. For other customer segments, like the rigid types, I think the risk is lower because they have a personality from which they want to understand things, find information to make the best decisions on their own. And the agent will help them do that, but they want to be in control for the end decision. So I don't think there is a one-size-fits-all answer to this question. It depends on what the customer segment is that uses the intelligent agent.
Dear candidates, well, I think you could have gone on for another hour. The time has now passed for defending your thesis. So I adjourn this session for deliberation, and I invite you to please await the committee's return in this room. Dear candidate, the doctorate board of Tilburg University has taken note of your dissertation. Having heard your defense, the doctorate board has decided to confer upon you the doctoral degree. The Professor Leenders is authorized to invest you with this dignity. Professor Leenders.
It gives me great pleasure to accept the task assigned to me by the Rector Magnificus of the University. By virtue of the authority granted to us by the law and by the regulations of the University, in accordance with a decision of the Doctorate Board, no, just here. Yeah, no. I hereby promote you, Henricus Bartholomeus van Thiel, to doctor. You acquire hereby all the rights that by law and by custom are or will be attached to the doctorate. Apart from rights, a doctorate also comes with obligations. These, first of all, include the execution of research and all other scholarly activities with the utmost integrity. The privilege of being a doctor also entails that society needs to be able to rely on the sound and independent judgment of those holding a doctorate. Do you promise to act according to the principles of scientific integrity in future scientific research?
Yes, I promise.
As proof of you having been awarded the title of doctor, I hand you the certificate signed by the Rector Magnificus and the supervisors and confirmed with the university seal of approval.
I perform a pleasant task, learned sir, in congratulating you on behalf of the Tilburg University Doctorate Board with the dignity acquired. I would now like to give the floor to Professor Goudet for the pronunciation of his laudatio. Please be seated.
Young Dr. van Thiel, when you first asked me, sorry? Oh, ik moet staan. Ik moet staan, sorry. Young Dr. van Thiel, when you first asked me during our meeting on May 25th, 2019, whether I would be willing to supervise your PhD, I didn't need a moment to think about it. I was more happy than to agree. I had known you for quite some time already, back when you were marketing director at ING, and I, representing Thiel's Nimbus, the business school of Tilburg University, served as an academic director of the Master of Marketing program of ING. This was a major program aimed at training several hundred top-tier marketeers, product managers, and brand managers to achieve a master's degree in marketing. What was particularly unique about this program was the collaboration. Every module was co-taught by a professor from the university and a business director from ING. And during that period, you also contributed a chapter to the book, Financial Service Marketing, which was a part of the curriculum. You still know? Okay. The reason you approached me was that your former supervisor, Professor Fred Verrij, an economic psychologist, had retired. You needed someone to guide you further in your research, and given the quantitative modeling aspects involved, I enlisted my esteemed colleague, Professor Roger Leenders, a specialist in mathematical modeling, to serve as a supervisor. Thankfully, he was willing to take that role. By that time, you had already advanced from being director to become a CEO of your own company, AdviceRobo. Your journey from director to CEO and now to earning a doctorate clearly illustrates your drive and determination. Yet, I must admit, I occasionally felt the effects of that same drive. There were moments when you suspected you thought you were the CEO of the university as well. And our long-standing relationship meant I could remind you tactfully, of course, that a PhD candidate, you were not the one in charge at the university. Pardon?
Not yet.
Not yet. As a native of The Hague and myself from Rotterdam, we often needed only a few words to understand each other. For some, as someone as driven as you must not always have been at easy, but never showed it. In the nearly 20 years I have known you, you have always been a gentleman and someone who knows what they want, but also understand the boundaries of your role and responsibilities. That made it a pleasure to work with you, especially as our conversation often covered shared interest, as we had many of around 45 of those in recent years, I count them. Your passion for the substance of your work was evident clearly on, and your pursuit of a doctorate came as no surprise to me. Long before this, you demonstrate your interest in publishing on the same current research. I recall Riding the Waves en Bankieren in 2020, a collection of assignments from adult students participating in your module, together with Professor Wil Reinders. We edited this in a very successful book indeed. The book explored how banking would transform in the future and the role of technology would play. To our surprise, it became a bestseller, right? As had we known that in advance, perhaps we wouldn't have donated the royalties to charity. But that's another story. Your research represents a logical continuation of your interest in banking and its transformation in the digital age. The findings and articles from your research will undoubtedly be valuable not only to academics, but also to banking practitioners and other interested parties. The connection you've drawn between behavioral aspects and decision-making is particularly noteworthy as it combines technical and human elements, both of which are critical in banking. Incidentally, I believe the human element in banking has been increasingly sidelined in recent years, which is a point of criticism I often raise. Trying to resolve even a simple matter as at any major bank branch that deviates from the standard processes can be a frustrating experience for clients. Similarly, calling a central customer services number often leaves one feeling ignored during the relentless standardization, which creates an impression of indifference toward individual clients. Perhaps AI and your research into psychology indicators could help address this issue. After all, consumers benefit from a more personalized human connection with their banks, not from further erosion of that relationship. The beauty of your research lies in the focus of these human aspects, calling renewed attention for them. In closing, I am thrilled that you have successfully completed your dissertation, and I will miss our conversation about our businesses, our families, and the many enjoyable memories we've shared over the years. I wish you and your wife, Rosalie, and your children, Rutger, Maurits, and I forget, Diederik? Roderick, Rutger, Maurits, and Lily Rose. Okay, thank you. And much success and happiness together. I'm certain that we will cross paths again from time to time. All the best to you, Diederik.
Well, and this brings us to the end of this academic session. On behalf of the Doctorate Board of Tilburg University, I would like to thank the committee members for engaging in this interesting discussion today. And I would like to give the opportunity to the committee members via Zoom to congratulate the young doctor. Dr. Chen.
Congratulations, Diederik. And I just very much look forward to, open that conversation and continue that conversation. What you are doing is very much the top priority. We talk in the UK, as you mentioned, with FCA, with lots of charities who care about financial literacy, about really real people's life, how they get served. And I think your work will, going forward, will bring great impact on real lives. So I'm very much looking forward to have more collaboration, more conversations in coming years. Congratulations.
Professor Van Engelen.
Dank u wel. Als het mag, veel persoonlijker. Heel even in het Nederlands. Beste Diederik, heel hartelijk gefeliciteerd met het bereikte resultaat. Het helpt enorm om meer zicht te krijgen en meer grip te krijgen op de technologie die over hele conservatieve en oude werelden heen walst. Wij hebben al via een hele korte introductie online afgesproken dat we elkaar nader gaan ontmoeten. En ik zie er naar uit om samen een best wel groot aantal discussies te gaan voeren over dit bijzonder belangrijke onderwerp. Voor vandaag is het feest. Heel hartelijk gefeliciteerd.
Thank you once again for participating via Zoom. You may leave the session after the cortege has left this room. May I ask the guests who are present in the auditorium to please leave the room after the cortege, row by row, starting with the family and friends in the first row. I now close this session. May I invite you to please stand up and ask the professors to leave off their caps. May we be filled with the breath of life, which will guide us towards the wisdom and knowledge to heal that which seems incurable, to accomplish that which seems impossible. The session is closed.